Welcome back to this another live session from Forex Trading User Academy for the NY session of Tuesday and Wednesday 2025, and beginning this session with two currently shortlisted pairs, Euro, dollar yen and gold. And gold was, if you look at, it's on a absolutely in a very narrow range. In that area that you can see gold, it's a pretty narrow range, and in that narrow range on gold, that currently the market, if you look at, it's a very narrow range. So looking at potential trading opportunity this session, as well as if you look at here, the market is in a very confusing market structure at the moment, as this is a very narrow sideway market. But there is a very important points that you can note with this confusing market structure is that once this market will prepare to move in one direction, that's gonna be significantly bigger move. So ready for an entry here like we did in our previous session. Before we look for an entry, we are first looking to do the full multiple time frame analysis, and then we will be looking at entering the trade. By the way, guys, if you are new here, make sure you like this stream and also subscribe to the channel if you haven't done yet. And I'm waiting for all members to show up for that entry. Welcome back to this live session, traders. Hope that you are enjoying the live session. Make sure you like this stream and also subscribe to the channel. So I think waterfall coming. I think so. There might be waterfall coming shortly, and we are looking at that area where there might be an waterfall. Do you think that waterfall coming? How many of you think that waterfall coming? So let me start a poll to predict an waterfall. I'm posting a poll. Let's see how many traders think that waterfall coming. All right, so posted a poll to see. So I think waterfall coming. Welcome. Apart from watching this live stream, how can I become a better trader with your help? Amit, welcome to the live session. First of all, keep in mind that can I enter the trade on dollar yen? Not yet. We are looking at entry. Again, we had a previous entry, but we will be looking for re-entry again. We are running one trade, and dollar yen is potentially to be bullish, what I think, and we will be looking at entry as soon as we see the market reverse from that level. Not yet. So apart from watching this live stream, how can I become a better trader with your help? Well, to become a better trader, the first thing, guys, keep in mind that I can give you the strategy, I can give you guidance, but this is what you need to first set your mind, okay? It's all about your trading psychology. And one of the very fascinating thing in trading is that you can learn everything, okay? but no one can teach you trading psychology. Okay, so which is absolutely important to look at, keep in mind. You can get a mentorship on learning to trade, learning the strategy. Okay, everything you can learn as a skill set, except the trading psychology that you need to work on in developing, because this is the hardest part in trading. Hardest, not harder. Developing a trading psychology that conducive to your trading success. And once you can master that trading psychology, you are 1% as a trader. That means for the rest of your life, either you are 20 years, 40 years, 60 years, you are retired. How fascinating is that? If you like that, make sure like this stream, subscribe to the channel if you haven't done yet, so that you can access every analysis that I'm posting in the channel. So now, how can you develop that trading psychology yourself, right? That's the question. To develop the trading psychology yourself, there is some technique that you can apply. Okay, it's one of them. It's called that idealization. There is a very simple exercise that you can apply, not only in trading but also many aspects. So make two boxes like that, two columns, right? And in these two columns, in one column write your trading psychology, and find an ideal trader trading psychology, and then compare side by side. That works like a magic. Compare side by side. So how do you, what's your emotional control? Like, do you run a trade full? This is you. What a professional, successful trader who says a great trading psychology do. And then let's say this one, but the yes, then bring awareness to it. Then the next thing you can write here is, do you remain disciplined? That means, do you trade in a specific session, or you trade just whenever you feel like trading? If no, then find a session that is high volume. Try to stick to it like that. Once you do that, you start to bring awareness to how you are trading and how it should be. That's where start to shift happens as a trader. It's just simple. Ready to have a shift? Now let's look at the market here now at the moment. And watching the live session will give you a huge edge to develop that trading psychology that you need. Thank you. I understand. One of the things I get confused about is the time frame. I should trade on 5 minutes, 150 minutes, 1 hour. Want to be an intraday trader. Okay, so about the time frame, we'll be coming on more in depth on that. It's a very important point, because especially in the beginning it happens. Some trader, even when I begin my trading, one day trading on 5 minutes, the other day trading on 1 hour, and then going to the swing trading for 4 hours, and then coming back to the 1 minute chart. So which time frame is ideal, that we will be discussing later. Before we go that, let's see that how the market is currently evolving here. Looking at daily chart here on the daily time frame, gold, to see how the market structure is creating. Now from the daily perspective here, this is where there is a breakdown on the daily, followed by this pullback, another drop, followed by this pullback. So the market is in a typical downtrending market structure that you can see on gold at the moment. And if you look at very historical perspective, that long-term picture, that for example here, see how the daily market has built that momentum here in this zone. Okay, here it was in a complete sideways, right? If you go to the 4-hour to see that box, in this area there was a long consolidation that you have seen happened. The market was in a sideways for an extended period of time, and then boom, that has got another big trend back to the upside. Now the market, after such a big uptrending move, after forming a double top here in that area, there is a complete breakdown, pullback, another breakdown, pullback. The market is on a sideways movement here at the moment on gold. And with this sideways movement, if you look at that here, this is resistance with a long wick candlestick pattern forming series of lower high. Previous session, we are coming to very narrow time frame, right? Smaller time frame. There was a previous day, if you guys have seen that, there was a bullish move and an immediate rejection. So it's on a sideways market, right, in this area, but at the same time with a bearish lower time frame price action that you can see. This is the lower time frame that you can see in that area. And there is a support break multiple times that you can see in this area. Break of support. And in that break of support, if you look at from this high here, complete breakdown with a stronger drop back below to this support level. Support here, support here, support here, support here. And in that support, the market has penetrated completely back below. This break that you can see on the 5-minute chart on gold. If you look at this breakdown, is a liquidity grab. Okay. Now see how the breakdown has happened here. With one single drop without any pullback, which is a high area of value. And the market has again rebounded back to the upside, maintaining this series of higher low, which is showing up gold might even break again back to the upside here in that market. And the way this structure has formed in this area on gold, possibility here breaking back up is high. It is still in a bullish trend that you can see on gold. So where gold maintaining this series of lower high here and also series of higher low here, there is a narrower zone that you can see in this area with a narrow triangular pattern that you can see here, that as the price initially has grabbed liquidity from the support, the possibility here to break to the high is higher. And as the market grabbed liquidity multiple times from this support level here, the possibility here for the market to break that high, that means we could see eventually potential short-term, at least a break to the upside here. Therefore, for us to find an entry for this potential bullish, and at the same time there is a series of lower high. So how can we enter? Because there is a consolidation, we have to look at little patiently with the directional bias after potentially another liquidity sweep from this support level here in this market. Here's after multiple liquidity sweep here, the market is eventually could be breaking to the upside here, that you can see after multiple liquidity grab, the price action is showing up to be possibly bullish in that area. And as it is in a, if you look at, if the market breaks out here, then we might see a 4 hour, if we look at the 4 hour here as well, the previous session's high, potentially to move up and creating a new higher high. So for us to enter, this is a very interesting price action because this series of higher low formation every single time the market is maintaining that series of higher low. So quite a few narrower candlestick pattern that you can see in this area on gold, giving a possibility for another break back to the upside here. There is an imbalance here, so we might see a break above to nearly to 60 pip. The market range is narrow, so therefore the move may not be very strong at first move, but you might see that after an initial liquidity grab we can look for an entry. So this is a very, if you look at it, it's a very funny structure, isn't it? There's a bullish move, bearish move, bullish. So it's a very random, and it's a one candle range. So when the market in this kind of one candle range, that is where to look at for waiting for the price action confirmation. So it's a one candle range that you can see here. Brought that pattern in that area, and also maintaining that series of higher low with a stronger liquidity grab from here with this rejection. So the bias here to break in that direction is higher. Therefore, if you look at this trend line, breaking below is a potential opportunity to go long here in that market. Ready for an entry? So yes, if you are ready for an entry, as soon as the market will show enough confirmation, especially retesting this session's low, that's an important price action that you can look at. Testing the session's low and rejecting back again to the upside. Okay, with a doji here that you can see the market. Okay, so it's breaking that low, which is that we were waiting to see the market to break that low for any entry to the upside in this market. We'll be using a pending order here for any bounce from this level, for any move back up here in that market. If the price bounce off this level, that means breaking to the upside, we will be looking to enter bullish trading opportunity. If the price is showing enough bullish trend continuation back to the upside here. So I'm looking at placing a pending order above this high, keeping a stop loss below this low. It's going to be a tight entry. The volatility is low, so you'll be placing entry as a buy stop. That means as a pending order. That you can maintain at least 2:1 risk reward, and it's gonna be 24 to 25 pips stop loss, still very low. It's gonna be a buy stop. So we place the stop loss at 3992.02 and TP target at 3999.43. This is a buy stop. So what we are expecting here, the market to go up and then trigger our entry and then continue to rise back here. If the market drop back below, that means we might see that further pullback and we are not entering into the trade yet in that situation. So we place pending order at this level, and also I have shared the same trade in the premium group. If you are on the premium group, you should be able to see that trade. And as this is a currently, you can see from this triangle the price is breaking below here. We open buy is because from this triangle, if the market break below, it is, if it return back up again, that's where the key, guys. If the market return back again to the upside, we are potentially to go higher. Before any market, you'll see that before it takes off in one direction, it's gonna create a false breakout to the other direction more often. That is where you need to look at, guys. That is where the secret, because when you are looking at a market, the market will always puzzle you, right? As a trader, smart trader are those who understand when the market is making the fake move before it takes the real move. How do you know that? Very simple trend. Look at this pattern here. This is a triangle, right? It's a triangular pattern that you can see in that area. Now in that triangular pattern, as a rule of thumb, it should be breaking to the upside, right? That's the rule. If you see that a pole, right, a flag pattern, it should be breaking to the upside. But before it break to the upside, more often it's gonna break below, so that it gain the liquidity, and then it's gonna move in the direction of the thing. More often or not, this happens over and over again in the market. Now the market is currently, you can see it's at the top. The question is might be that why you are not going long here. We can go long here, but you don't know that is this the end point of this down move, or we might see further downside, or we might see that complete breakdown due to some news. But if the market reverse from here, going back there to our entry, then the probability to go back up is higher, and we are trading the probability. What is probability? That's the smart way to trade. Understanding probability will give you a big edge in the market. The probability is the key to become as a trader. You need to know the probability. You don't have to know the maths. You don't need to learn the permutation, combination, the mathematical term that to know the probability, but just the fundamental foundational aspect of understanding probability is very simple way. Think that, as I mentioned earlier also, if you cannot explain something to a 5-year-old kid, then you don't understand it, right? That is an established statement from many scientists around the world, so that they just simply explain that even something very complex, if you understand, you should be able to explain it to a 5-year-old kid, and he or she should be able to know that a trading strategy is not very different than that. A probability also the same way. So how can you explain probability to a 5-year-old kid in terms of trading, right? Okay, we might get an entry here. The market has bounced back to the upside. Oh, my trade is active. We are active. The trade is active, guys. All right, so let's wait for the market to potentially bounce off that level. Let's catch some peep here because the market is pretty volatile. And now with even, this is a very tight stop loss, you guys can see. And we want to take this move back to the upside. But due to the low volatility, only 24 pips stop loss. This is insanely low. All right, so here is the market is trying to break that high, and it's potentially expecting it to play out back to the upside to hit that level. Okay, now how do you explain this to 5-year-old kid? Imagine that each trade that you open only with 1% risk, not one lot, 1% risk each trade, right? Now, if you are opening 1% risk per trade, if you are losing, then you are losing minus 1%. Boom. It's bounced off that level, guys. You're up. Come on. 25 to 26 pip. Going up. 28 pip. 29 pip. Boom. 29 pip. I'm going out with this trade now. The market has a comparatively low volatility. Profit taken. Profit taken. Smash the like button now. That's how you can develop that trading skill. All right, so now we done that. Mine taken. I'm going to share in the premium group now. Okay, it's still potentially to cross that high. This is what I have begin in the beginning of the session, that the market initially to break low and then to revert again back up. It has done that, right? It's a big cross move back to the upside. Now, if you missed this move, then if you missed the education, I would highly encourage you to go back to this little bit earlier of this live session, how we discussed, because that will give you a very good understanding of how the trade was executed and what we discussed, that the market to break below before it bounce off that. Did that, do that. If you followed that, my order is active. Well done, well done. Thank you, welcome. Now, if you enjoyed that, if you got benefit from it, make sure you like this stream. And now, have you understood the education? Before it breaks to the upside, more often it's break to the downside, right? This is what we talked when it was coming, and it did that exactly. That is education. That is observational. That is the true understanding of the market. Once you learn that, you can trade anything, right? You can trade gold, crypto, forex, euro, dollar, yen, Gbpjpy, euro AUD, anything. It's a skill set. It's an education that you need to know. No one can take it from you. That's why I value over everything education, right? That's where you can gain skill set. Watch every live session, okay? Don't miss any of the education that I'm posting. And you can also enhance your skill by learning the exclusive courses that I have currently on Gbpjpy, almost 95% off. It's gonna be ending. There's nothing in comparison what you learn there with the 95% off, which is nearly to free. Now, right now you can visit the website www.forextradingwizard.com, and once you are on the website, just click join now button, okay? And then go to the checkout, check your email, be part of the trading community. You're not gonna find it anywhere, as you guys see that every single day I'm trading on live, and there is something, all the tools, trading strategies, everything is available for you as a lifetime member. It's a lifetime opportunity. Take it now. Visit the website. You can find link below this video, and then click here to join, and that's going to take you to the checkout page. It will give you the lifetime access to everything that you have in the academy. How did you decide on the TP level? Okay, so for the TP level here, this swing high here. Secondly, it's based on risk reward, and you can see the market has hit that TP and returned back again. Trade on dollar CAD, we will be going through a little bit. Now, after break of this high, it's now breaking back again below here. Now, if you look at here, what do you see the market from this high here? It's breaking that low again back below to this support level with a double bottom, rejected back above. Now, let's see that where the market potentially be heading back again. Now, the TP level set is to answer this question. If you guys look at, you can see this blue line is where the previous session's high, 4-hour high, and our TP is just previous swing low. Is because the market might go to that level or might not, might just reject back again. This is what you can see that in that area. Let's keep trading and learning to trade. Still just the beginning, right? We still have the whole session for this one to like it. Okay, so there's a question from Ahmed TF. Thank you. I understand one of the things that I get confused about in the time frame. I should trade on 5 minutes, 15 minutes, 1 hour. I want to be in an intraday trader. Okay, I think this is a very common question about the time frame. So what time frame you should be trading? There is a very important point that you need to look at. What time frame you should be trading? Firstly, always keep in mind, guys, to trade you need multiple time frame. Okay, this is the first thing. You can't trade on 1 minute or 5 minutes or 15 minutes. You need to use the multiple. Look at this trade that I have opened in the system. 1 minute, 15 minutes, right? So firstly, you always need to combine the multiple time frame for an entry. And when you look at the multiple time frame is very important. That's where you start to see that overall the direction. Okay, looking for further entry opportunity. Now, when we look at that time frame, right? 5 minutes, 15 minutes, 1 minute, 1 hour, and 4 hours. What time frame that you should be trading? First of all, guys, keep in mind this is an actual trading education that can change the way you look at the market. So always look at least 2 time frames. One is entry time frame, the other one is higher time frame. In an entry time frame where you will be entering into the trade, that means 1 minute, 5 minutes, 15. Now what time frame you should be choosing, we'll be discussing later, but you should have a lower time frame that you will be using for entry to the market. And you should have a higher time frame that will confirm you the directional bias in the market. Because when you're looking at only one time frame and trading on 1 minute, you're not gonna be able to enter always and be confirmed about the directional bias in the market. So therefore, for an entry time frame here that you can see, and if you are trading on 1 minute, it depends on some of the things. First of all, if you don't have enough experience as a trader, at least 3 years to 4 years experience, then try not to trade on 1 minute unless you are trading with me in the live session, that you have some clear understanding of why I'm opening the trade, right? That's how you start to learn also. But if you have an experience little, at least 1 year or so, you can trade on 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hours. Now, what time frame you should be choosing will determine your trading style. What do I mean by this? If you have enough time that you can sit in front of the chart, like when you are watching the live session, then you can trade on lower time frame, such as 5 minutes, 1 minute. If you don't have enough time, then trade on 4 hour, right? Let's say you came, that's the freedom of trading. Like swing trading is a big way. If you have a full-time job doing something every day, come from work, look at the chart, set up the trade, and then let the trade run by itself, which is set and forget strategy. Next day, at the same time, sit on the chart, look at the chart, look at the previous trade, set the next one, and let it run. Let's say you are working, you have 100k, 50k, and just let it happen over and over again. Simple way to create financial freedom. You need trading psychology. And 1 hour you can use, 4 hour you can use. Okay? The only thing that you need is stability and discipline as a trader. The hardest part here is having consistency in your action, not in trading, not in results. Consistency in action. That means every day, same time, sitting down, looking at the chart, placing the trade, not deviating from the trading plan. You can achieve that. That's what the trading psychology. You have to detach yourself from your emotion. Can you detach yourself from your emotion? You can do that. When you detach yourself from your emotion, you can set up your trade when you are, on a flat water. That's where you detach your emotion from yourself. There are two things. One is observer, the other is observe, right? Most of the people, observer and observed, are same. Okay, you can detach the observer from the observed, then you can detach from your emotion and develop a strong trading psychology. All right, so now we secure that trade. Now looking at the next one, always looking for the more entry. That's where the key. And there's the bullish move with a, is this forming an inverted head and shoulder again? That's the question, right? In that area. USD/JPY closer. USD/JPY we are still running in. I'm still expecting the market to bounce off that level. And if you look at the price action, it's still possibility for a bullish move on dollar yen. So we are still on it. Looking at calendar to see where heading back to. looking at that one on calendar, that you can see on earlier there was a cash rate 2.6%. So earlier tomorrow coming again in the morning, and employment change and unemployment rate on NCD also gonna be pretty massive, with ADP non-farm employment change coming on, also NY session. Two important news coming in. Definitely the market gonna react to those news, and that's what we are looking to see, how the price action potentially be doing in the upcoming news. And today is Tuesday, right? Tomorrow Wednesday, and this is a big week in terms of trading, right? Because of the NFP. And in fact, it is what we are looking at here for this week, a bigger move because of the shutdown. The past NFP was not been publicly came out. Now this NFP also showing tentative. So, but still there is a move, right? During that time, if you remember past month, pretty big move, and this NFP as well expecting same kind of move to come up. Right, so from here, after multiple liquidity sweep, the market again has gone back to sideways in that area. So where are you out early on trade? Okay. We are halfway to that. Now, as if you look at this trend line that I'm looking at, the current support, the market has broken out of the trend line, filled the imbalance, and the bounce of that, tested the upper shadow again in a sideways. So because the market again in a sideways, it require one more break again, and that might bring the price back here and then bouncing off that level. Which time frame is it? Okay, so we are looking at the moment on 1 minute chart on gold, for we have entered the trade based on that, and looking at further entry, as again it's in a narrower sideways market, and with this again what we are expecting again to break again back and then to trend back up to the upside again for another bounce back above in that area. So patience is key. Once you win one trade, always okay, sit back, relax, and then look for the next one. There is a tendency to jump on few trades in a row. It happens, right? What is special with 1 minute chart? The special with 1 minute chart is more trading opportunity. Okay, and it's for gold and euro dollar, dollar yen, British pound, US dollar. This is a great time frame because if you look at this 1 minute candle, for example, this red candle, how many pip here? You can see 26 pip on this one here. With this inverted head and shoulder, there is a breakout from this resistance, and you can see the market is having that potential trend back up. And maintaining the similar kind of support here. We will be looking for another imbalance for an entry, and the bias is still to the upside that you can see from the 4 hour. Okay, if you look at the 4 hour time frame, in this area it's showing up to be potentially upside here in that market. Let's delete the levels and see that where the market is heading to, and this is a structure that you can see could be breaking to the upside here, and that might lead the price back above this level. Even if it goes up to that level here, that's where you could see the market to trend back again to the upside to create a new higher high. Now, going back to the dollar yen price action to see what kind of market structure is forming. Now, dollar yen, here there is a consolidation, and looking at the daily chart on USD/JPY, we can see that from the daily, this is where the previous resistance in that area, and the resistance here, which is turning support here. Previous resistance turn support, expecting the market to boom, bounce off that level again back above here. And from the daily, if you look at, it's a complete drop back to this level, right? Resistance, turn support, bounce potentially to the upside here in that market. So this is the trend line here that you can see, and that's where we place that entry on our move from the 5 minutes. And after this break of this trend line, it's now again created another move. So it broken back below, grab liquid and bounce off that level again. Inflation data, recent consumer price index reading have come in softer than expected. This is a low impact news, but this is where some kind of, if you look at the market, normally doesn't react to that much, but it's good to have some idea of the data, because those yellow or low impact data ultimately build the pressure on the high impact data. Okay, so if you look at here on dollar, you see that it's gonna be an indication of how the ADP non-farm employment change will come out, or how average hourly earnings or non-farm employment change will come out. Also will determine the consumer price index, right? Because, for example, if there is a high sale in the past quarter, try to understand, guys, there is a relationship that will also help you to know before the data publish how the data has come out. Okay, now if there was more spending in the past 3 months, right? If there are more spending on the past 3 months, how does that influence the data, or how you can predict ADP non-farm employment change or unemployment rate from that? You see, this is how you need to reason or understand. If there are more consumer spending in the past 3 months that you have seen today, and tomorrow coming up unemployment rate, it's gonna drop potentially in most cases. Why? Because more people are employed, more people earn money, that's why they has been able to spend more. The spending comes from earning. When people earn, that they spend. When people can earn, they will not spend. Okay, that will reduce the unemployment rate, and it might increase also the unemployment claims. You see how the data they relate to each other, because in somehow the consumer has to have more liquidity to spend it more, and also that relates to the rate cut as well, right? So there are many ways you can relate to each other, but these are some of the data that will give you more understanding about the next one, how they might influence each other. The number may not be exactly as it is. There's a lot of random variation in data, but this is a generalized understanding of the economic activities, or which way the market or especially the economy is heading, and how it is influencing the overall market, especially inflation, interest rate. These are very important data in terms of the movement of dollar index and also movement of gold. When there's a high inflation, gold gonna go bounce, gold gonna be bullish. Okay, more often you see that. So okay, we can see there is a break again in that area here, and back to rejection. Now that might bring that market little downside here. And okay, so the price has to the upper shadow. If the market reject from here, this is the daily resistance, guys. The market has got rejection from. I wouldn't say that it's a starting of a downtrend, but there is a possibility for, there is a bigger imbalance in that area that you can see. Okay, huge imbalance in that market. And if we look at the calendar, earlier AUD news has been published, and tomorrow coming up NZD and USD news. So NZD in my zone early in the morning, so that's where not early, it's in the morning, so that's what the market will definitely have some move later this NY session, reflecting that news coming up. So with that move here, the price has now started to break below, and that waterfall could be looking to see that waterfall coming up. The waterfall that might bring the market back here. Now the market has finally broken back below here in that area. So as there is a break completely from this high here, now this breakdown now could bring that market back below this low. There's a pure FBG, there's no red candle along the way, all the green candle, and the market could break now below further to create a new lower low, as it managed to break that support with a bigger red candle, just stronger rejection from this higher price. Now with the dropping of gold, how do you see that DXY to form dollar index, dollar yen might bounce off that. If you look at the 1 hour candle, you can see after the previous 1 hour doji, this hour couldn't break that low here. So that is showing up that the market potentially to reverse back here in that market. Okay, so the downside here that you can see this market, which is breaking that low, break below here, and we might see that potential downtrend continuation here for more time, as there is a rejection, and that could bring the market below here, and that could be a waterfall. Let's see that if it is. And daily chart, that if we look at from this daily resistance got the rejection, we can expect now potential test of this daily low, or even coming further low, which is the previous daily low. And so dollar yen slowly building its momentum back above. If you guys look at it, you can see the market slowly moving up, and the possibility here dollar yen for bouncing back up is higher. If you look at the 4-hour, from this break of structure, it's getting that potential reaction back above here to this resistance line, or even breaking higher further. Gold is in liquidity sweep. We saw there was a complete break below to previous support. The market start to trend here again. Okay, so now slowly again on a pullback. I am now looking at also dollar yen. Dollar yens, we are on a trade and it's now showing some upside here. Dollar yen might start to have some more potentially after this inverted head and shoulder. From the daily, we can see there is a significant drop on dollar yen so far. And okay, on gold, there is a bearish rejection here. We might see how this candle closing important. If it is closing a big red candle, we might see downside. But it's getting some long wick here. so that's not ideal bearish candle. So with the drop here that you can see on dollar yen, the market from this previous resistance and support getting rejection here back above in that area, and that rejection that you can see from here, quite a few long week candlestick pattern formation could continue to rise back here again to the upside to create a new higher high. And that is the level that you are looking at this market structure. Ready for another entry in any of this, either on dollar yen or on gold. Now if we look at the 1 minute chart again in that area on gold, the price action here has formed smaller 3 candlestick pattern, right? So that if we see now a liquidity grab from this high, that will bring that market again back below in that area. So if it is not breaking that low, we might see that some upside again back above. Especially I'm looking at on both of this on the lower time frame. On dollar yen, we are on a trade. You guys have seen that, and we have opened that. It's now creating another price action that might lead the price back above. And especially the daily price action that you can see on dollar yen had a significant break below, and which is from this level, from this daily previous resistance and support, tested that swing high as a swing low. And with this triangular pattern that you can see on dollar yen, the market has broken back below. And because the market has broken back below from this triangle, we might see the price to boom go back up to the resistance line. And that's why we are on a trade. You guys have seen in previous session, we open a position and we look for that further entry in that market. Here is on the gold that the price has completely broken back below from this level. And good info, welcome. Can we short gold now? The market is in a little consolidation. I'm saying little is because it's not a big, we see trend sometime. But for us to get the entry, we want to see again the price on a key level. We had a previous trade that you guys have seen successfully closed, successfully taken the profit. Now, to enter another one, what we are looking at here now, an important break of structure. We entered the previous one from the break of structure. If you look at here, you can see this is a break of structure, right? nice looking trend, and then suddenly break from that structure. So the structure is, if you look at this triangular pattern, and the market has broken back below from the triangular pattern, bounced back to the upside. That's a very, very common pattern. Always keep in mind that a flag pattern followed by a triangle. All right, in most of the time, in majority of the time, you see the market will break below and then will trend back up. If the market doesn't break below, started to trend up, you can expect more often to drop again back before it trend back up. These are very ideal pattern that you can see over and over again in the market, and that will give you more often understanding in what situation you will be open. If you see, this is the trade that you have opened, and if you go back to our live session a little bit, go back in recording and see that when the price was here, this is what I was talking about, that the market potentially could break below and then bounce off that level, and that's why you place that pending order in that area. Once you understand that, you can take every trade exactly in the same way whenever it is coming in the market. Guys, this is trading, this is education. Market is random, but there is an understanding, there is an order in that randomness, right? Once you understand that, it becomes easy for you to navigate through the market, when to enter, when not to, based on the price action confirmation. Risk management is key, because more often you're gonna be, if not more often you're gonna be wrong in your approach, and that's completely fine, as long as you have the risk management plan and following that plan. And that's freedom as a trader, right? Once you can master that skill of doing the risk management. All right, so here the market has again pushed up for another pullback to the upside. 15 minutes price action. Now we are looking at trying to break that low. There's a possible for weak fill here again. So we see there is a potential weak fill in that area. We might see potential for the trend continuation. All right, so as after this breakdown, we have seen another pullback, and the sign here showing up that the market potentially to, at least for short term, to remain bearish here in that area. So that means 4-hour market structure that you can see, might see another if this red candle that you can see, you can't say that it's gonna drop and breaking, creating a new lower low, because it is not in a very stronger trend. But this is the 4-hour move. But if we look at the 1 hour, that you can see, which also there is a bearish move. Now that 1 hour candle close coming in 8 minutes time, and with the candle close, if we see the closing somewhere here, we might see some short-term downward pressure coming here in that market. Okay, so here there is a break again, and if it is leaving it as a head and shoulder dropping down, one possibility. The other possibility is to slowly move back up again with this break of structure, continuing another side here. Now with this, if you look at here, it's a bearish engulfer on the 1 minute chart that you can see on gold. And that bearish engulfer back to back to 1 minute candlestick pattern showing up to be downside here in that area. Okay, so maintaining that downtrend that you can see. So still showing potentially downward pressure here. So waterfall coming. Let's see. It is creating that pattern. Sell and read. What's that? Enter. Okay, now here we see the price action showing up significantly downside and approaching a pure FVG. It's a bullish fair value gap, right? And that bullish fair value gap is important because there is no any significant level of zone here that you can look at. So therefore, breaking below here can give stronger momentum back down. If the market failed to break this bullish fair value gap, it might have a reverse effect and it might bounce off that level. Therefore, looking at that level that you can see here on so far in that bearish market, we could see the price to come back below here to this support level. Looking at 1 hour candle close coming in just a matter of 2 minutes, and it's a full bearish engulfer with a double top. Are you going to see that move back below? What's your opinion here? Share your thought. I think the way there is a rejection from this 1 hour price action, you guys can see that is a sign of further bearish move here. That might bring that market back below, as there is a bearish move back to back 2 hours of liquidity gap and then dropped again back below here in that market. Now, this is a 5 minutes candle that you can see also long doji that you can see in that area. And with that 5 minutes candle, with this long doji, the market may continue to drop. And this is a void here. If you look at, it's a pure fair value gap in that area. Before the candle close, are you going to see a rejection here? Okay, 1 hour candle closed with a long bearish engulfer. Now this 1 hour candle, the way it has closed, the possibility for break below is higher. Now if the market breaks below here from this 1 hour candle, it's gonna potentially to remain little more bearish, and Now, looking at both of these instruments, dollar yen and gold, the yen has closed with a narrower red candle here, and so two red candle. The possibility here on dollar yen, if the market not being able to break the low, you could see the price to bounce off that level. So gold again having some rejection back above. Okay, so here is the market structure on gold is potentially showing up to be dollar yen having some downward pressure. I think it's gonna potentially retest this support again, and that might bring new entry opportunity here in that area on dollar yen, while we can see that gold is so there is a consolidation in that area that you can see on gold, and that consolidation might now with this upside, if the market strongly reject from the higher price, you could see that downward pressure, or there might be just sideways again in that area. Now because the market has comparatively shorter span of trend, you guys have seen that we have our previous trade we always better to wait for the right entry, right move. And you see, we are looking at from a key level. So if the market goes up here again, crossing this high, getting the rejection, we can look for sell. But here is, you can see this is a lower time frame bullish price action that might now go back to 3992.31 level, and that could bring back again from that zone here on gold. So with a double bottom here, it bounced off that level here, and very unusually bounce off that level again, crossing that high here on 30 minutes. If we look at so it's a sideways market now in that area. If you look at the 1 hour, it's a sideways market. So when the market in a sideways, only thing that you can do is to wait for the market to show up the trend again. The trend is the market usually trend only 30% of the time. But sometime, for example, this market that you can see, it's now 20%. All right, 80% is on a sideways. Finding a move, you guys can see that the one that you have opened is where exactly the market held a breakout. And understanding that will give you a big edge in the market, always to look for false break and then to trade based on that false break. Because when you see the market has had that false breakdown or breakout, you have a better understanding of the market structure after the false breakout or breakdown. It reached that 4-hour resistance line. Now, There is a double bottom and then again breakout from that double bottom. Now to see that where in fact the market is trying to be heading, there is a significant bounce from this level here, and it's purely sideways. You look at the market moves like sideways. See, this is the 4-hour candlestick pattern, and that's a one long doji. Still we have nearly to 2 hours for this candle to close. How this candle will close also determine the next move in the market. But if this 4-hour candle closing as a doji without creating a stronger bearish move, we could potentially see another upside here, unless this 4-hour candle is breaking low here and then creating a new lower low. Market structure created in a way that price from this level is in a trend and can break that low here below to this support. This market not following any kind of specific grammar, that I would say that if you look at the grammar, sometimes the market creates a bit of less predictable structure, especially when the market in a sideways. So that is why you'll see that there is a rejection, and then instead of correction, it start to change the trend. So that's where gold in that area from the 4-hour perspective form a doji. But in case this 4-hour candle closing as a doji, there is a high chance for the next one to potentially bounce off that level, going back up to daily high. If you look at the weekly here on gold, you can see that so far from the weekly it's a narrower doji. Now from the weekly, very interesting price action. If you look at, this is the weekly support and weekly resistance. The chances here for this market to bounce off also higher, as this is the weekly market is bullish. So we said there is an initial weak fill here. The bias for the bigger picture is upside here in that market. So the market dropped and then complete rejection of this lower price. So with a long wick candlestick pattern that you can see on gold is also forming double top, trying to break below here. Now, because as this is a long term, if you look at the daily trend is still here in that zone is bearish. Now both direction is still open for move, especially from the lower time frame we can see the change of trend. That means a complete pattern formation. Okay, there is a rejection coming here on the lower time frame. And if that's a bigger move back below here, that might bring the market even here. It's now fully determined based on how the lower time frame candle closing. Patience is key when you are trading, as I mention all the time, guys. Patience is key, because when you can trade based on patience, you started to see the market in a different way, because you have more time, you're observing the chart, you have more time, you're looking at the chart. That's being more skill, more understanding. Now from the 1 hour we saw there was a big red candle followed by immediate rejection. Now it's getting again some rejection from the higher price. So as we mentioned earlier, this is 15 minutes, right? After this such a big bull candle, usually the next one to bounce off that level. Now you can see some rejection back again. How this 15 minutes closing also important. If it is straight coming back below here, then you can expect further downside. If it is closing as a doji here, then you might even see upside. Depending on how the price action closing will determine many of the factors, how the market structure might be doing in that area. Give you welcome. We see the drop down back here in that area. Now from the 1 hour, it's got big rejection here. Now that rejection less. Now if this rejection, the 1 hour chart that you can see breaking that support here, this support, then you are looking at crossing this low here, 3960. But it's still long way, because there's another chance of bouncing off that level. Let's wait to see how the market is reacting to that support in that market. So here is after this back-to-back two rejection, red candle, and again the market up showing that the price to potentially to trend in that area. Now waiting to see if the market is breaking this 1 hour candle. Now if this one is close breaking that 1 hour candle back below, and look at the 30 minutes, it's a pretty long doji, then the next candle to look at the support here. Getting a complete rejection from this resistance line. That's a big bearish engulfer that you can see here as being formed on the 15 minutes chart. And closing this candle back below is potential for, because there is a red candle, green candle, and again red candle. So back to back three false candle created here. And because if you look at doji and then the price has crossed that high, created a red candle, green candle gone up, crossed that high again, creating a bearish engulfer. That's a powerful candle for further downside, and there's a fair value gap in that area. Waiting for a trend to come up as we are progressing with the NY session. As tomorrow NZD news coming, that will also bring the market pretty volatile here. And so the bears are still stronger here in that market. And 4-hour candle on the from this 10 and 20 MA, it's a complete bearish so far. In the last moment there is a rejection from the higher price. So dollar yen is on a support, and well, you can see that on gold here. Is this going to cross this high again? That's gonna be interesting if the market again go to fill that long wick. The market goes up again, that means there's no trend and the sign of low volume in the market. But as we are progressing with the upcoming news, we might see that continuation, and waiting for the trend continuation, in fact, because if you look at the 4 hour and the 1 hour especially, and this 15 minutes candle that you can see, it's a bigger bearish engulfer. Now this 15 minutes candle bearish engulfer potentially, as a rule of thumb, should be playing out, as it has a very sharp rejection with multiple candle crossover. If the market breaking that low, if this 15 minutes candle not being able to cross that high, we might see that downside move in that area that could bring the market back below to 3968, even 3966 level. So we have successful trade, and patience is key. We will have more in the upcoming session, guys. This is exclusive live session that I'm doing every single day, twice, along with also everyday posting analysis to help the community. Make sure you like this stream, subscribe to the channel, and do random giveaway study also to join the premium group, where you can learn my courses, strategies, and also access every single trade that I'm sending in the premium group. You can visit the website, and you can find link below this video. If you wanna, currently it's 95% off. It's almost no charge in comparison with the value you can get. You can click here to join the course right now to access your trading, to enhance your trading skill, to take it to the next level. We can see that rejection here, and that's where the market potentially continuing to drop back below, as that downtrending market structure could play out to drop down here. All right, so there is a fair value gap. The market is approaching to that. Awesome. So that's a move. We might see now potentially to come back here at 3967. Price action on gold now on the lower time frame bearish, so we see that downside momentum. Okay. Bearish engulfer formation, and that might bring that market potentially to come down further. So it has broken that support on the 4-hour chart that you can see, and that potentially could bring the market to this support here again. Therefore, looking at entry on a pullback, this is the 1 hour, this is the daily low that you guys can see, 3966.68 or 3967. Okay, so this is the daily low, and the market got the rejection, means that we could see the price to test the daily low, and from the daily low either you could see rejection back again for testing the upper shadow of the previous daily candle, or continuation further down here. Depending on how the market structure is forming, we will be looking to enter again with our next trade in the market. And it's a great pleasure to all of you with trading all of you guys. We are looking to come again tomorrow twice in London as well as NY session. I'll see you there again trading live together. Until that, stay well, stay happy. We had a successful trade. Let's look for the next one. The best one is more important than too many trades. Quality is more important than quantity. So we see you there. Thank you very much. We'll talk to you soon.